Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Monday, March 27th edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we're going to talk about all these ratings this morning on Snapchat. The quiet period is over. Everyone under the sun is rating the stock, and they are bullish, at least as of this morning. The tide seems to have turned there. We're also going to discuss this sell-off there and maybe a reaction to Friday's healthcare news and how it's impacting the overall markets. We have two guests for you today. First at 8:15, we're going to be joined by Warren Lorenz. He's the CEO at Tech Meets Trader. And then at 8:35, we're going to have Tommy Lackey on the line as we do every Monday. Joel, how are we doing in the S&Ps this morning? I mean, I know how, but
not too good, yeah. Spencer. Really a big move in the S&Ps. Something we haven't seen in quite some time. We're trading down 19 handles here. That's off the low by 8 handles. The pre-market low of 2317.75. That's a point above your February 14th low. We were debating the reasons for this. The defeat of the healthcare bill on Friday. Chinese banks a little bit weak. We'll discuss that more with Dennis when he comes in here. We have crude trading down 36 cents at 47.61. I guess OPEC couldn't really do anything over the weekend to alleviate the fears of the oversupply of the market. And a little flight to quality here. You have gold trading up $10 and silver up a quarter, knocking on the level of $18. Dennis, how you doing on this Monday morning?
Well, looking here at the S&Ps, Joel, and that's a little bit unexpected here over the weekend. Pretty significant sell-off. What are you thinking? What are your levels saying?
Well, I can tell you what my level said over the weekend. And my level said that there were 4 closes within a point and a half, 2 points of each other in the daily pivot. So it gave me a strong inclination. There was a big move coming. So I was going to put a straddle on because I knew I was going to move one way or another, and I didn't want to, guess the direction. But now I think I have to scrap that plan here and reevaluate because I certainly don't want to put a straddle on here 5-6 points below. Let's see how much of the spiders are down below the level that I was looking at. And plus, you're going to have heightened volatility, right? The VIX is going to be way up this morning, so they're going to put some of the premium back in those options. So, I don't know. I'm hoping for a rebound up to the 2340s, maybe not today, but back to that area. And then I think I'll put the straddle on. But I just can't go be buying options or, going into this volatility at this point.
Yeah, VIX is trading up 12.5% here this morning. We're trading at 1460. So obviously we are going to be more volatile here with this sell-off. I mean, it's, the end of the world coming here. I don't know if I'm getting on board with that. Did we top out is the question, and something like the banks, maybe. I think obviously, we put in a short-term top when you look at a chart like Bank America, but the way this market has been so resilient, every time I've, tried to get a little bit bearish here, especially shorting in the hole like this, it's come back to bite me. So, it's tough to just jump on the whole bear train here this morning. But let's talk the financials first because they are getting hit the hardest here. And sometimes, if you're not clear, and you're looking at the index and you don't know what to do, sometimes it helps to jump into the individual components and really analyze the charts from that perspective. And that gives you maybe a clearer picture. But jumping over here first to Bank America, because we were talking about this one the last couple of days. Obviously, we had multiple highs up in the 25s. We get the interest rate hike that didn't help. And, and obviously it's just kept leaking since then. And now we look here, Bank America is trading down at 22.60 here this morning, which is actually right there near Wednesday's low. So we actually haven't breached Wednesday's low here, which is 22.45. So, but, I'm looking at the charts. I can see all the multiple lows in December and January at right around $22. And that's where I'm looking on a stock like Bank America.
All right, good point there, Dennis, going right to the charts. The low from last week was 22.43. We haven't hit that yet, so I'd be keeping an eye on that. Other lows right in that area as well. Then you can look at a psychological level like 22. as well. Got a bounce, not a huge bounce, but the fact, and we were talking about this after the interest rate hike, that really didn't go. We were looking for that Bank of America to take out 25.80, take out the paper at 26, and continue higher. But it didn't even make a new high for the move. People were selling into it. So a little bit of anticipation here. I mean, I can't call bottom yet though in Bank of America.
Jumping over here just to a couple other ones. Goldman Sachs was $255 a week and a half ago. We're now looking at a 225, so quite 30-point sell-off here in GS, and it is taking out its low. So, you've had some of these stocks that, some of these financials that are holding on to their lows from just late January, early February. Well, this is not one of them. This has been an ugly 5-day slide, and obviously more significant here now, and you're into a little bit of an area here too. We had the big run up in late November when we went from 210 to 230 in 4 trading sessions. Now you're kind of sliding back through that area.
Yeah, some lows at 220, and then Dennis, you did identify that area between 210 and 220. I mean, to get back to Trump land before the election, I mean, that's 180. I don't see it giving back all those gains just because so many people are short the stock. Getting caught. There's going to be bids, along the way. But the implication from Friday from the Healthcare Act, how much is going to be enacted? If the Republicans stonewall them on this. I mean, big problems here, and I think that's something market built in. All these policies we're going to go through without a hitch, and this is the first sign of trouble here on Capitol Hill.
Yeah, you can say why the financials get hit, with healthcare policy. Well, I mean, Trump has talked about, tearing up Dodd-Frank here, and if he's having trouble getting stuff like the healthcare bill and obviously put through here, he might have trouble getting other stuff put through as well. And I think, that's where, financials are really getting hit hard because these are Trump stocks. These want deregulation here, and, he might have a battle. It might not be that simple for Trump to just get in there and start tearing up Dodd-Frank. So that's why I see the financials weak here again this morning as their Trump stocks. And, you got to classify, and you give Kramer some credit too. He's on there on Mad Money classifying stocks as Trump and not Trump stocks. And, it is important to know what moves, when Trump, is, getting pushed around a little bit, what is going to be weak off of those stocks, or which stocks are going to be weak and which stocks could potentially be stronger. So this morning here, obviously financials very weak. Just jumping over here to a few other ones that obviously have benefited a lot from the Trump inauguration and from the Trump rally was U.S. Steel, symbol X. And this stock, if we go back just to when Trump got elected back in November, was a $15 stock. And then it jumped in 3 months, ran over $40 again, while quietly starting to give some of it back. Weekday this morning again for U.S. Steel here. It's down 4% in the pre-market, trading 31.45. Joel, give us some levels on U.S. Steel.
Yeah, trading right here at 31.45. And if you look here, you have a low right in that area. Let me get the exact number for you. Pull up my data window here, and I can tell you that you had a low at 31.33. This was back on February 2nd. Below that, you fall under $31 at 31.71. So 31.33, that's a big level. Also, Dennis, man, if you try and do a 50% retracement here, oh, man, I don't know where you want to start from. If you start from 16 to 42, man, I'm not doing my math too well today. 42 minus 16, 32, 26, half of 13, 13 and 16. Man,
that's a lot of air math going on there.
Yeah, try to do it. That takes you to 30.
For 8 o'clock in the morning on a Monday morning.
Man, there's a long way to go to get to that 50% retracement. That could take you, 16 and 13 is what, 29? So 29.30 could be an area of interest there if we continue lower.
There is some individual stock news here, and we'll jump back, in any stock you want to cover here. Obviously, we're getting beat up on their cyclicals or industrials. Anything that's related to Trump is obviously getting hit. Some of your defensive stocks are catching a bid. Gold trading up over, or at least the GLD is trading up $1 here this morning. So that's moving up your gold stocks as well. A lot of your miners here up 3 to 4% here. So looks like a risk-off day, obviously, at least at the open here. But let's jump into, some individual stock news here. Snap, SNAP, quiet period appears to be over here, Spencer, because we have every analyst and their grandma piping in here this morning on Snap.
RBC, Morgan, Cowen, Citi, Goldman, and Jefferies all initiating Snap today at either overweight, outperform, or a buy. So bullish across the board there. Yeah, the quiet period. So the Snapchat IPO'd on the 2nd. The 25-day quiet period is over this morning, which is why we're getting a flood of new reports. All bullish, and a lot of these banks were underwriters, right? We had Morgan Stanley, let me read the list here. Morgan Stanley, Deutsche Bank, Goldman Sachs, Barclays, Credit Suisse. Those were the main underwriters in Snapchat, and this morning we're seeing most of those. We're seeing Goldman, Citi, Jefferies, Morgan, all hopping on the buy train here.
I mean, you make a good point here, Spencer. You talk about, all these analysts, and if you were involved at all in, underwriting it, or if you were involved at all in the deal, you're not going to come out bearish on the stock. So, I mean, it's a lot of these analyst ratings here, at overweight and buy, and the price target's 26, $27. Really, is that really what they're thinking, or is it just that they can't obviously talk down the stock that they underwrote?
Right. That's exactly it.
So we look here, and Snap is trading up. And I mean, if you just say, I think about the Drexel Hamilton buy, which was out of the blue last week. That was the one that kickstarted us, and that tacked on 10% here. But if you come in here today thinking, oh, every analyst here, it's going to tack on another 10, 20%, I'm not sure that's the case, because I don't think anybody didn't expect some of these underwriters come out bullish on the stock. So, interesting, it is trading up here. I'm not coming in here and saying fade it, because this stock, gets the momentum and gets going in one direction. It can go for a while here, but I'd just be cautious if I was coming up here chasing this thing as a buy this morning, thinking, all these analysts are going to push the price up, because I don't think the stuff's unexpected.
Right, and we were saying last week, or maybe the week before, like when's the last time, analyst sentiment on an IPO has been this negative? And if you didn't know better this morning, you would have said, oh, wow, the tide's turned. But most of these guys were underwriters in the stock, so it's in their best interest to be bullish. So keep that in mind this morning.
Joel, give us the technicals here on
There's
Snap.
only one number here, Dennis. One number.
Ooh, I like it when you only have one number for me.
2471. That's the and you know
why?
You know exactly what that is, Dennis. 2470.
50% retracement.
Yep. Pre-market high 2440. We've backed a buck off there. You clear 2470, you close over 25, then this thing back is going to the top. A lot of people stuck in this. I think that's going to be a major number here going forward. 2470, pre-market high 2440. I don't even know if we'll get into 24 handle today.
I think you got some resistance in the upper 23s, because even last week you got in the March, you got 2368, you got 2340. I'm going just back to March 9th and March 10th. Then obviously the last couple of days 2330 and then 2310, and we're leaking here this morning. Ace making a good point. This thing already put its pre-market high, and the people who got up really early there and chasing this thing are getting hurt here right now. Now I don't know if I'm going to see this thing turn around going red here today. I mean, if it did that, it'd be really bad. But I think it's definitely not encouraging that this thing was up in the 24 handle already this morning and it's already given it back. So the logic coming in here, I think some people thinking, well, none of this is unexpected, that the underwriters are going to be bullish on the stock. So valuation still scares the hell out of me on this thing, especially in a bear market, if we're going into a bear market, which I don't know. The jury's still out on that one yet, so I'm not sure if I'm going to get all bearish here or not. But Snap is not a stock I want to own if stocks are going down. Jumping over here to, that's why we're talking ratings. We might as well talk the other big one of the day.
I was going to go 8:15 time for my first guess, but who do you want to talk?
Let's go 8:15.
All right.
We'll come back. We'll talk the Best Buy.
We'll be right back with Warren Lorenz, the CEO of Tech Meets Trader, in a moment. All right, welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Condon and Dennis Dick. We're on the line now with Warren Lorenz. He's the CEO at a site called Tech Meets Trader. Warren, out in California, thank you so much for waking up early to be with us this morning. How's it going?
It's going well this morning. Thanks for having me, gentlemen.
Thanks for coming on the show. So to first tell us a little bit about what your site actually does, Tech Meets Trader. What is that?
Right, so Tech Meets Trader is a social community for stock and option investors. We're an active community of investors that congregate in groups that are specific to us, and we navigate financial markets together. So we're very similar to what you consider a Facebook, but for stocks.
And why did you start this site? I guess what need did you see? What prompted you to want to start a Facebook, but for stocks?
Right. So when I was navigating the markets by myself, I realized that I was trading in isolation. There wasn't a true place for me to find like-minded individuals and collaborate, really, because StockTwitch was very limiting based off of the type of 140 character limit sets, and Facebook was just too disorganized. And when I left Northwestern Mutual and I started my own trading practices, I really couldn't find other individuals that were successfully navigating the markets. So what we do is we allow others to create groups in which they can congregate into chat rooms, investment groups, live trading webinars, where we can actually show our screens in real time and look over each other's shoulders as we're navigating markets and trade together.
So, what is your experience in the markets? How long have you been interested in it, and what's your trading like?
Right, so I've been trading for the past 3 to 5. Actually, well, I've been trading actively for the past 3 years. I've been trading, intermittently for the past 5 years. I started off at Northwestern Mutual, where I got my Series 7 and Series 66. And what happened is honestly, very, very early on, I just got really lucky. What happened when I was actually in high school, I bought Facebook around $19 a share, Netflix around $42 a share. So as you can imagine, that type of luck really kind of sucked you into the market and into the opportunity that the financial markets present. So I'm active every day in the markets. I'm trading my own capital now every single day, and it's working out well.
So how do you go about what is your trading style? Are you trading only in the morning hours? You're trading around the open and around the close. When do you trade?
So I like to trade in the morning primarily. Obviously, there's the most volume there. I'm a market profile trader, so for the most part, I'm looking for day trades. I want to be in and out within the day. I do swing trades and long-term trades as well, but I like to take the majority of my portfolio, especially in times like this where you see, the Dow down over 120 points, and you're looking at the S&P down almost 1% right now. It's great to be in cash and be able to take advantage of opportunities as they come across. So I would say that I'm more of a short-term investor at the moment, but if I find a long opportunity, for a long-term or swing trade, I'm definitely not opposed.
And what are your setups like? What indicators do you use?
So I'm using the market profile right now. I'm looking at VWAP, TWAP, and I use custom-coded indicators based on that. So I buy single prints below value, on regular normal distribution days, and then when we're extending the range, like today, it's going to be a little bit more difficult to. So I look back at historical key levels of value areas. So I really look for the 80% rule, during the market distribution days, when it's swinging in between single prints below value and going, expensive above value. I'm looking to just trade the range. I also am looking at Economical Cloud for swing trades as well. Helps me stay on the right side of the market. So those are the two primary indicators I use primarily. But I'm not opposed to add in some moving average or even Fibonacci's if I need to.
And what type of stocks are you trading? Is there a particular market cap in your wheelhouse? Do you do options?
But so I actually right now I'm trading mostly futures. given the market profile works best on those markets based on liquidity. I do also trade options heavily as well. I don't really touch the underlying as much unless I'm going to be scalping gamma or taking off my trade as I'm going along. So it really depends. Yeah.
Are you going long and short?
Yes, I go both long and short.
Okay, and then you said you're mostly day trading with a little bit of swing trading in there. How did you learn your trading style? Like who'd you learn from, or what sites or what platforms?
That's a great question. So I would say that the best learning experience that I had came from watching people over their shoulder, which is why, at Technics Trader, we host these live webinars where people can actually show their investment theses in real time and how they're navigating the markets. In particular, I was watching Andrew Keene from AlphaSharkTrading.com. I mean, he has a great unusual options activity training program in addition to futures trading, live trading rooms as well. So he had some of his traders going through the markets every day and really showing you and teaching you and coaching you how to navigate these types of investments. In addition, there's also ActiveDayTrader.com with Jonathan Rose. He's also an ex-CBOE market maker and hedge fund veteran. And, he's taught me a lot about the futures market when it comes to the yield curve and how to trade bond futures with really taking the directional risk out of it and looking at relationships, looking at what notes are expensive compared to others, shorting the expensive ones and buying the inexpensive ones, and really just trading the spread and butterflies off those. So it was really game-changing when those two individuals broke down their trading strategies, their risk management skills, and portfolio management as a whole, because it really allowed me to take it from the next step from, at-home hobbyist trader to professional, let's take money out of the market every day type trader.
So you definitely advocate for building a community around trading, right? I guess that's the point of your site, is to build a community around trading and learn from other traders.
Right, exactly. And, having access to these individuals that have such knowledge and do want to share, because, if you look at the futures market, for example, a small retail investor like myself isn't going to move the needle, right? I mean, that's where the big funds are trading, and, so it's in essence a non-competitive market for the retail trader. And so you can teach tactics like the market profile and looking at volume weighted averages and whatnot, and it's a sustainable strategy for everyone, right? So I mean, they're not saying that my strategy works for everyone, but everyone can find one that's based on their own tolerance. And if you have the connection and the at a couple of clicks of a button where you can reach out and ask questions to these individuals and work alongside them and actually befriend each other, it just makes the entire experience much more lucrative for everyone. So that's really our whole mission. And why we actually host communities for these affiliate companies is what we call them. We onboard these communities so that they can educate their following, and we host actually all of their live trading rooms and webinars and groups completely free, such that they can educate everyone in a more fluid and convenient manner.
You can learn more about what Warren's talking about at his site, techmeetstrader.com. Warren Lorenz, thanks a lot for hopping on today. We'll talk to you again soon.
Thank you, gentlemen. Thanks for having me.
All right, it was nice to talk to a younger trader. Joel, how are we doing in the S&Ps right now? Are we coming back at all?
No, we're still hanging out here at 23, 25 even. I do have a level, though, even though we haven't traded down this area in quite some time, and maybe I sound like a broken record here, but 50% retracement on the day is 2327.63, so let's call that 2327.75, and over the last hour, we've hit that level 3 or 4 times, actually since 5:30 a.m., so if you're looking for any kind of move to the upside here, right there, you're looking at a good number, 2327.75.
We already got half the losses back from the overnight low.
up at 27.75. Yeah, Dennis, we got down to 17.75. We opened lower. Okay. We've had a 20-point range. Add 10 to 17.75, right. And that's what you got. Yeah, it was interesting because I like to keep an eye on the 4 o'clock close. Dennis, were you trading between 4 and 4:15?
Yeah, it's a good point because we had major movement. We sold off significantly. If I remember, I have goldfish memory, but I can remember. I think we sold off about 4 points there between 4 and 4:15, right?
Yeah, we were real volatile late in the session. Went down and made it low. Actually, we had another good level. We had a double bottom at the 23.32 area, and then for some reason we got this nice spike almost to 23.48. Now at the cash close was 44.75, so that's where you're being marked from on your positions. Actually up 44.75, but in those times before the SPOOs closed at 5, we sold off and we were at like 42.5. So boom, 6 points off the high. And then this area right here, that represents the 6 o'clock open from last night. And you can see we opened, 5 points lower from that last print and then really never looked back.
Jumping over here to individual news, we promised you we'd look at Best Buy here, which is one stock getting an upgrade this morning. We got Piper upgrading it to an overweight, putting a $55 price target on it. BBY is trading slightly in the green. I mean, it's hard for a stock to go up a day when everything else is obviously going down around it there, but here's a stock that's been in consolidation station, and we can look from 42 to 46. We've basically been there for the entire year. Really, in the last month, we've been consolidating between 44 and 46. We're kind of still hanging out in the middle at 45, but we got Piper getting bullish on the stock this morning.
Yeah, I mean, I can't run with this one too far. I mean, you do have a triple top just above 45 here at the 45.15 area. And then, Dennis, you mentioned the top of the trading range. That's at 45.70 area. And then nice lows, man. If you're looking for a place perhaps to, get out of this thing, a breach of 43.75. So in the middle of a trading range, I'm not chasing this one, especially, it's a retailer. And if you think about it, Dennis, all the retailers, good old Best Buy hanging in there. I
was just going to say the same thing. You're reading my mind, but you think about how bad it's been for retailers, and you think, Amazon naturally thinking Best Buy must be eating all of their lunch, but wow, the stock has held up very well, and like I remember Herb Greenberg tweeting out something saying that Best Buy matches prices on Amazon now. So really, you can go to a Best Buy and you can say, hey, look, and everybody has got their iPhone, their tablet, or their iPhone with them. They can show, here's the price. So you can get, and what he was saying is, why wait for 2 days on Amazon? You can walk into your Best Buy and get that price immediately. So it was a good point he was making. So maybe Amazon is becoming the showroom for Best Buy.
And also, if you look at it too, I think their percentage of online sales, has that been going up? I haven't done any research into it, but obviously, that's the key, to challenge.
I wonder those figures too when they talk the online sales, just because last time when they bought a PC, they actually didn't have it in stock, so they took me right in the store. They went online for me and bought it online for me there. So I was like, is that really an online sale though? Because because I wasn't online, I was actually in your store, and now it looks like that was an online sale, but you actually did all that process for me there. So I've actually walked into the physical store. So you wonder sometimes, if that's online sales and stuff is always accurate, because I'm sure they booked me as an online sale, and I was actually in the physical store.
I like going in there and getting help.
I do too.
And just like when I walk into Home Depot, man, I grab someone with an orange apron and I make them take me exactly where I want to go. So something to be said there for customer service.
Just jumping over here to Barron's, because I know you had your Barron's this morning, and it looks like they're pumping Viacom here this morning. What do they say, 40% upside here in Viacom? And obviously Viacom has a two class of shares, VIAB and VIA. VIA is the one that has the voting rights, so it always trades a little bit up ahead, or for a little bit more price than the VIAB. What do Barron's have to say here? Spencer, did you have the details on this one?
Well, I mean, The headline there was, you just said it, 40% upside.
I stole it from you.
Yeah, you stole it from me. It's okay. Yeah. So they see. Let me go through my.
They're going for quality over quantity, and this is something that we reported on a while ago, right? Spencer?
Well, Viacom came out a month or two ago now, and they said they were gonna pare down their focus. They're really gonna focus on 6 of their flagship networks. If you care to know which ones: Nickelodeon, MTV, Comedy Central, Nick Jr., BET. And Paramount, and they have way more properties than that, but they're going to focus on those 6, and yeah, like you said, quality over quantity. I was reading last week actually an article, I believe it was a journal, about how all these big TV conglomerates are really, basically we were in a massive TV content bubble, and the bubble seems to have burst, and a lot of these channels are being left for dead now. So yeah, Viacom focusing on their core here. Barron's likes it. I don't know. It seems like the future of TV is a little murky for me personally. I'm not sure I'd want to get in right now. As someone who follows the space, just the whole thing is murky. But Barron's likes Viacom.
I mean, I'm torn here on, stock like Viacom. Sure, it's old school and everybody's looking at, and I'm not sure, if obviously there's much money in TV advertising as there was in the past. But, there's value in a stock like this. The stock company still makes money. The company, when you compare it to valuation to something like Snap or Twitter or anything, it's a joke. I mean, this is a company that's actually viable, no pun intended, and, is still, making good cash here. So, I don't know, Joel. I'm very torn here on Viacom.
I think that you could get a longer-term perspective on this. 89.76, that was your all-time high, and now you've backed off. I mean, just looking at the charts here, it's come off. I mean, I'm looking at this 46, 47 area. We're still 4 or 5 points away from there. That would be a bona fide breakout to the upside here. On the other hand, I think you might be able to get it cheaper on a pullback here. We've had a nice 15-point rally off the lows, so I think I'd rather get a cheaper area. The other thing, too, and I think I read this in Barron's over the weekend. I don't know if it must be out in the media, but ESPN going in Disney going subscription eventually is what
I heard that, too.
Yeah, that could I'd pay for it. I mean, that's one of the only channels I watch, so I mean, we're going to see a big change in TV, Comcast, satellite. I mean, someone's going to figure out a new model, and obviously paying for all these channels that I don't use is something that, people will want to alleviate. But chart looks okay. Like, I'm not chasing this thing. It'll be a breakout above 47.
I mean, if I'm looking at the VIAB, if you're looking at the chart on that one, I'd say $42. I think if you're coming in here buying it this morning around 4, it's going to probably be up because of the pump in Barron's. It's trading up slightly on the pre-market of $43.50. But if you're coming here buying this morning, I wouldn't want to own it below those couple of lows that we had, just below $42, $41.73, $41.80. That's where I'd get concerned here. So I guess, as long as it stays above that level, I guess the bulls have a little bit of control on this. But yeah, it's just tough for traditional media here, especially since everybody's using their iPhones and they're looking at media in different ways. TV is just not the future.
I would just keep an eye on, too, as, came out last week that Twitter, Facebook, Amazon, Netflix are all competing for the NFL for Thursday Night Football next year, which Twitter, of course, had last year. So as more and more of these tech companies compete for, traditional TV properties, I would just, watch that.
Just one other thing here, and I mean, it's hard to watch all these charts, and you're a gap fill trader, you had a nice bump from 42 to 45 off earnings, and then you came right back into that area. If you wanted to look for a gap fill, that was almost perfect. Maybe take 30, 40 cents worth of heat, but 45, that looks like a nice number on the upside.
Should we bring Tommy on live?
Let's do it.
I say we just bring Tommy. Let's just bring
me?
Tommy on live. Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors, will be joining us in just a moment. He always has for us a handful of notes. He's got his morning, his meltdown scanners, his everything. And
nitrous scanner.
Nitrous scans.
He's got scanners. The boy's got scanners.
Yep, the nitrous scans, the meltdown filters, stocks he's watching, stocks he likes, stocks he doesn't like. Anyway, calling Tommy right now. Let's see if he will answer his phone. Tommy Lackey.
This is why we take a break.
No, we got Tommy.
Morning, guys. How are you?
Hey, Tommy. How are you?
Doing great. How about y'all?
We're doing great. Doing great. How are things down there in Georgia?
It's nice and warm, which I'm happy about. You guys can keep all that cold stuff up there with y'all.
I don't know what you're talking about. It's supposed to be 70 degrees today, so...
yeah, but you're going to get it again. You know darn well you are going to have
He knows how it works up there.
Ridiculous day.
Oh, that's funny. That's good. Okay, let's start off with general market sentiment right now. We're obviously down this morning. What are you seeing general market-wise?
Well, I think we definitely broke some important levels on the short-term basis and maybe even the intermediate basis on a few things here and there. But overall, the major indexes are still holding up pretty well, even with the IWM having the worst week last week after a strong week the one before. It reversed the entire week. It still held the major range that we've been sitting in for a while so far. So this week is really the pressure week to see how quickly or how far we want to snap that. However, I looked at a lot of breadth information this weekend and noticed that on a long-term basis, the macro breadth I look at still looks pretty solid. Intermediate looks the most, for lack of a better way to put it, mushy or having issues. And the short terms are actually starting to show some bullish, short-term bullish signs, like in the scenario of having an 80% down day last week is pretty important. Usually within 1 to 3 days, you'll see a bounce. If you don't, you'll probably get another big down day like that, which often is kind of the seal the deal. The only time we worry about percent days is if they start clustering 4, 5, 6 in a row or within a couple of weeks. And then also we have the McClellan oscillator that's basically finally starting to give us a divergence off of last week's extreme low on the oscillator. McClellan oscillator has a pretty good or pretty solid record of pointing out short-term kind of stretches to where the market's maybe ready for a bounce. And we've talked about this since I came on y'all's show. I think bounces are much more important to read the tea leaves, for lack of a better way to put it, than the actual initial extension move up or down. So I think that's something we need to be paying attention to.
Tommy, before we move on to the nitrous scan here, we're talking about, the S&Ps. We haven't come in down 20, 21 handles in a long time. You had the news. What do you attribute this to? Do you attribute this as a little uneasiness about policies getting across in Washington? I did see a Chinese bank was down big on some worries about a dairy client that they're associated to. I mean, you always look for a driver. You always look for a catalyst here. And this is a substantial down move. What do you attribute it to?
Well, I want to start with the whole point of the substantial down move and all that, and always attributing it to something. I think at some point, the longer you're in the market, sometimes you just realize that the catalyst might not be what actually caused it. It was just kind of that last little thing that just helped it, push it out the door. And so, the fact is, I think we've had some things we're overheating a little bit, and I still think this is a short-term in nature for now. So, yeah, any of those news events that were building up certainly could have been kind of the straw that broke the camel's back kind of thing. But I don't like to place, having to put a why on everything is a big human issue that we have. And it's one of the things that makes trading difficult for a lot of people, is having to always search for that why.
Instead of the why, figure out what to do next. That's a great point, Tommy. Let's move to the nitrous scan here. And BCOV, it's a small software name here, trading around 1060 area. Tell us what you like about BCOV.
Well, those are last week's notes.
Oh,
is that what I sent y'all this morning? Did I send you last week's notes?
I don't know. Did you?
Are either one of y'all in the chat?
I got it. My bad.
I've got X. I don't have. What about XOMA? Is that on this week's notes?
That is exactly, yes.
Come on, Joel.
Joel's opened the wrong email. That's Joel's fault.
My bad, guys.
You got to blame Joel for something every day. It's not a Monday morning if we don't blame Joel for something. So I'll take the nitrous scan, Joel. XOMA. What do you see in this one?
This was an interesting, it's not a company we know much about, but it looks like it's putting in a pretty decent sized base here. down near the lows. Now again, it's only it's single digit, so some people don't like to play those. But if it gets over Friday's high, I think the next resistance heads up to 762, and then the 200 and SMA at 797. Those are my short-term targets. But if you look at this chart, it looks like it may be trying to reverse on the weekly. Got some pretty solid volume footprints in here off the lows. So if it can get over that 200 SMA up there, it could potentially move for a little while. It's got a huge gap up closer to the 12 and change area.
Here's one I haven't looked at in a long time. Celestica, CLS. I think this company's Canadian, or I think at least it was listed at one time on the Toronto Stock Exchange, because I can remember trading it in Toronto. Celestica, CLS, what are you seeing?
Yeah, this one, the thing that caught my eye is that on-balance volume is moving up ahead of price. It's already broken out, and it's already moving to new highs, and so that shows some underneath accumulation. And you can look at that volume chart and see the same thing. But a lot of times on-balance volume will help kind of ferret it out a little better. The daily and weeklies both look solid on the momentum indicators. And, your weekly, while it's 68 on the RSI, that's still really not overbought, especially how we got here. If you look at that thing, it's just been gradually moving up on that weekly chart on the RSI since last July. So I think this one has a decent chance of breaking out over 1450, and that's what we're looking for.
One that actually might catch a bit here today is American Electric Power, AEP, and we're looking at the utilities this morning. They are trading higher here in the pre-market because we know money flies into some of the defensive stocks sometimes when the market rolls over. AEP is kicking around right near the highs, a little double top, ready to take it out there, Tommy.
Yes, and let's see if it takes it out. And that's kind of what I'm a little concerned about. I want to see how early this week kind of shapes up now that the healthcare thing, now that the news, as we talked about, is out of the way. Because I think that just gave a lot of people a reason last week, but now it's out of the way. Let's see how they act, because obviously if we are going into a more bearish consolidation or something like that, the utilities will do well. But when I looked at these, I looked at AEP, ETR, and Duke. They all had very similar charts, and I decided to go and check the notable options trades just to kind of see if people have been kind of jumping in there with some excitement expecting this, and there's nothing. It still seems fairly bearish on these three that I was looking at. So I want to make sure that breakout happens and it sticks before I get too excited.
LEG, Leggett & Platt. This stock is held up fairly well here too. Last couple of days, kind of quiet. What are you seeing in the charts in LEG?
Well, and I think that's it. That is something that you got to look at on that particular holding. Is it's back over 50, which seemed like it was a pretty important level, and it's held up above that, while the rest of the markets had not exactly been loving things. And that is above all the important moving averages. Now, the downside to this one is that there's still a big June put trade in there that's sitting right around the 50 area. So it really has to start moving away from this 50 level before you want to start looking long on it. Or if it breaks back below, you can play against these recent highs on the short side. So it's kind of a look both ways, but it has been acting pretty well in this recent environment.
RLGY, Real G Holdings Company, and this stock is actually kicking up near the highs as well.
Yep. Actually, I want to go back to leg real quick and look at my notes. And in my notes, I put the June 50 puts were sold in early February. That is not correct. Those were bought, not sold. Okay. So I don't want you guys to go with bad information from me. I apologize for that, guys. Okay.
Little typo
now
there.
Let's go to where were you?
RLGY.
Where were you?
RLGY.
RLGY. Yeah, this is one, again, you got the same kind of situation on RLGY. The chart looks like it's really shaping up. It looks like it's really doing good and starting to get ready to move out of this consolidation. But it's got to get through 30 convincingly, because the same thing on this one, actually, the flip side, we have September 30 calls sold on this one. A pretty notable trade around the end of January. So, those trades are not always right. The big option trades are not always right. But if you're right at that level, make sure it gets through with some pretty good vigor before you start getting heavily involved.
All right, let's move on to the meltdown and our Benton Harbor company here, Whirlpool, on the ledge, WHR. Tell us what you're seeing there.
And that surprises me, but I think it's something that we watch on here. I even looked to see if maybe somebody had come in and started trying to buy weakness or something like that on the option side. And I'm just not seeing anything yet. It kind of surprised me with this player because of housing starting to kind of kick back into gear. But that might be something we need to be watching, is the divergence between housing and the actual appliance manufacturers and things like that. Things like this one, Mohawk, some of these other players, and just keep an eye on them to make sure that they all continue to go in the same direction. But Whirlpool looks like it's has been having kind of a rough time. And it almost looks like either a triple top on the weekly or potential, which we rarely have, or maybe a big head and shoulders there on that weekly. So I'd be keeping this ledge it's on right here on close eye. And if it breaks through it, we'd be looking for the potential back to 150, which is not that long on a $170 stock. Man, if it loses that 150, that could be trouble, and I would probably be looking a little further out to see how that would affect see how the rest of the housing space is doing as well.
All right, talking about the storms in Generac, GNRC lost some ground last week. Store season's over. Tell us what you've seen in the charts in GNRC.
Yeah, that's my opinion. It's basically storm season's over. It had a big follower last week, and then it bounced right back up to basically the area that it lost. I mean, as long as this one doesn't move back over 38 on some decent volume, it probably continues to head down. Because if you look back on the chart a little bit to the first part of 2017, and about mid-January, you see a big gap down and down day. And I have a feeling that's probably the resistance you're playing against at this point, is right there at that 38 level.
All right, another one here, MYCC, another one dancing on the ledge. What do you see at 16 in MYCC?
Well, again, it looked like it wanted to break out. It had a big surge early part right after the first of the year. Obviously came heavily off those lows after the election. And now it looks like it's having a hard time holding this 16 area. And so if it breaks it, I mean, you have pretty much levels 15, you go down to a little above 14, go down to 13, and you just have a level each about $1 apart all the way down. Now your 150 and 200 day SMAs or simple moving averages are right around 1460, 57 to 65 area. So I'd be watching for that, but there just doesn't look a lot here. And I have to say, I probably have a little bit of a bias because I never hear anybody talk very good about their athletic club or their workout place.
All right. Some of your fans in the chat here, Down War Dog, wants to know how you interpret the SLV. Now, I always like to look at the futures as opposed to the ETF. Now, this one bumping up here against 17. I see silver over 18 here. A little flight to quality this morning. Give us your look on silver, either the SLV or the actual future.
Okay. Well, there's one thing about commodities that a lot of people tell me. Now, again, I tend to watch SLV more too because I don't trade these a lot, and I don't keep real-time data on futures other than a couple of free sites here and there, and so I don't dig into them too deep. So I'm looking at SLV. The first thing that jumps out at me on the daily chart is you have a really big inverse head and shoulders working on this one. Forming, actually. It's still in the formation. And if it gets above the 1750 area, can clear that and continue to move, then great. This thing looks like it's breaking back out to the upside, and it could move, and that's all very possible, especially if the dollar continues to weaken. But with any of the precious metals, we still have to realize they're a big fear-based trade, usually. I mean, silver is really an industrial metal, but it doesn't trade that way very often. And so from that stance, it's a scenario where if it doesn't get over that 1750 area, or if it gets up there and it decides to start to weaken, be very conscious of that, because if it fails from that area, it's probably going to be a fast move back down. And I would say that's very possibly would be coupled or more likely to happen if the markets shore up here fairly soon.
All right, let's move away from the meltdown here and get into a big-name stock that ran into some problems last week, some advertising on YouTube. Some big boys are pulling out here. You noted a big buy in the May 18, 8.25, 850 call spread. What are you seeing here in Google, GOOG?
Well, the one thing I think a lot of people have missed in the YouTube thing that a good friend of mine actually Alex or Wolf Metric on Twitter pointed out was that they've been working on the problem as far as being able to as far as the advertising problem on Google since the very first person pulled it out. Google usually doesn't take too long to fix things like that because they really do want your money, especially from ad sales. So I have a feeling they'll fix that pretty quickly. And outside of that, it's been a very strong player. So it's just a matter of whether you think this particular headline-based risk has legs to it or not. And honestly, if they get the problem fixed, I don't see how it could with the type of volume that YouTube does. Look at where we're watching y'all's video right now.
Jumping over here just to the chat, Tommy, we got one of your biggest fans there, Rob Hood. He wants to know your thoughts on Exact Sciences, which is EXAS. They did get initiated with coverage at an outperform this morning at a $30 price target from Cowen. EXAS, what do you see on the charts?
Yeah, it's a good pullback play. The only thing is with the whole upgrade, you want to give it a couple minutes and a little bit after open just to see if it can hold those gains. Joe that I work with from Options Hawk, he really doesn't like those upgrade gaps a lot of times. And I think I've heard you maybe talk about that before too, Dennis.
Yeah.
Is upgrade gaps and how they often can be faded.
I don't like to chase
really received well. And so this is one you might want to wait. However, you look at the other side, it's not going too far. And the way we've had this very orderly pullback since the 1st of March, honestly, if the gap does hold, it becomes a breakaway gap from this pullback we're in that just basically all it really did was close the daily gap back from late February. So I think it looks good and it looks solid as long as that gap does not get faded too heavily.
Esteban wants to know your thoughts on Weatherford, WFT. All kinds of news on this one. Friday night they announced a joint venture with Schlumberger, and then this morning they are getting upgraded by Wells Fargo to outperform. So lots of upward pressure here in this stock this morning. It's trading up 8% in the pre-market at 640. WFT, thoughts on the chart?
Well, the chart itself basically looks like an energy chart that's pulled back like a lot of them have, but it was after gapping up early March. So it's just pulled back to close that gap, and now it's starting to get good news again. Now, the other side, and I'm not sure it would surprise too many people, but since March 7th, this thing has been pretty consistently pounded with bullish call activity anywhere from April strike all the way out to January of 2019. So people are really starting to put some wood behind this thing after that first gap early March, even during this whole pullback. So this is one I think is very worth watching. And, again, the same thing. You get a big upgrade like that and a big gap up. It's hard to chase it unless you're a longer-term player or you're going to put it in pieces, by a third on the pullback or something of that sort. But it does look like from an energy standpoint, not only does it look like it's shaping up, from a weekly standpoint, it's got a big weekly base it's trying to move out of with this action. So it definitely is looking better.
And this one was really interesting. You see that bump it got over $7. That's when they replaced the CEO, I believe, and everyone got excited that a future deal with Halliburton or something was down the line. And then you came down, and once again, if you're just a gap trader, you're looking for these gap fills, man, that came down and filled it by only a few pennies. So had a couple classic gap fills today. All right, Tommy, great information as always on this Monday morning. Tommy Lackey of Relativity Capital Advisors will be joining us again next week. Thanks a lot, Tommy.
Thanks, guys. You'll have a great week out there. Stay safe.
Thanks,
hey,
Tommy.
Look what popped up in the chat. Dennis, Shack, where we tried to go eat last week.
Oh, we did.
What happened? I didn't hear about the end of this. What happened?
Yeah, I came over and Joe was going to buy my lunch at Shake Shack, and it was lined up outside the door, and it was like a Thursday at lunch. I mean, so, that's a good sign for Shake Shack. They were saying, somebody was saying it's probably 30, 40 minutes. I was like, I'm not waiting 40 minutes for a burger, so we ended up eating somewhere else. So I did not get to try Shake Shack, but I did get to see a big lineup there, so I guess, there's still some popularity there, at least in the D for Shake Shack.
Actually, I did a little reconnaissance on the way back, and I noticed some people that were in line just behind us were actually getting their food when we were already done eating from Lunchtime Global. So I think that guy kind of made it out a little bit worse than it was. But anyways, Dennis, Here we are. SPOO's down 21 points. You're probably seeing a few sell imbalances, huh?
You didn't get your technical thoughts on Shake Shack,
Oh, I'm
though.
sorry.
You wanted to we just jumped into our story. We didn't do the technicals for Downward Doggy. We got you, Downward Dog. Shake Shack.
Let's see if it's moving into pre-market here. No, not doing a whole lot. Let's just look at the dailies here. I think that you had that high over $33. I think you really need to clear that. Then you got some open skies up to 35. A lot of support at right around the $32 area. So if I was trying to nab a bottom here and I picked it up at 32 and change, I'd give myself down to that low of the move, maybe a little bit more, 29.90, and see if you can get something back. But pretty, really a tight range if you want to go a little shorter term.
Yeah.
Last 4 days in a little bit of a trading range.
Okay, jumping to the imbalances here. They are obviously mostly to the sell side with the big down. Actually, I'm hard to even find any buy imbalances. The gold miners have a few buy imbalances, but that's about it. A lot of red on the screen. Bank of America is one of the leaders here with your sell imbalances. 593,000 to sell on the opening imbalance for Bank of America. It's already down 3% here this morning. We know the financials are going to be significantly under pressure here. Citigroup 77,000 to sell. JP Morgan 74,000 to sell. Goldman Sachs 29,000 to sell. Just jumping over to some other sectors, I see Nike 83,000 to sell. I even see Altria, which is more of a defensive stock, MO 95,000 to sell here this morning. It's trading down pretty good. I'm not sure if there's some other news on MO. I didn't go check for that one. Some of your health stocks are going to trade down here this morning. Obviously, that might be concerning as well. We got Walmart even with the 45,000 shares sell and balance. Your oil's trading down. Chevron 61,000 to sell. ExxonMobil 42,000 to sell. ConocoPhillips 36,000 to sell. I mean, I'm hard pressed to find anything that's really moving up besides the gold miners. Utilities are up a bit.
Yeah, let's see what happens here if off the opens. I mean, just going historically, it's just so hard to sell in the hole here. Especially the way this market. We've already exceeded our average daily range by already 2 points, so I think there's going to be some bumping and filling. Market really needs to get over that double top from last week at 22.32 to shrug this off. Dennis, any particular strategies here on this volatile Monday morning?
Same thing I always do. When I come in, obviously some days you got to figure out, is this a risk on or risk off open? Obviously it's a risk off open, so that's easy to tell. And then I try to identify which sector is going to be the weakest, which sector is going to be somewhat, okay, which sectors might potentially be strong. So financials, obviously going to be very weak here this morning. You look at the steel, holy cow. If I'm looking at stuff getting killed here this morning, Nucor is down another 3% NUE. We already talked about U.S. steel. It's down 5% here this morning. So you're seeing, obviously those stocks getting killed. Alcoa fits right in that description. It's down over $1 here this morning as well, trading down 3.5%. So those are going to be your weakest sectors. Obviously, we talked about the gold miners. Gold's trading up significantly. Those are going to be strong. But your utilities are trying to show some strength here too. TLT is trading up. Your utilities trade with the bonds. XLU is trading up a little bit here in the pre-market. So then you start thinking, okay, maybe some of the defensive names might turn around and start to catch a bid. So you could catch a week open on some of the defensive names. I might be looking to buy some of those stocks. I don't know if I'd be buying them up on the day, but sometimes some of those defensive names will open down. And defensive names, I'm talking obviously utilities are the obvious ones, but you can even get to like AT&T's and Verizon sometimes trade a little bit more defensive. If those open a little bit too weak, I might be nibble into those. Something like a Walmart, like I'm looking at Walmart here this morning, 45,000 sells, probably going to open weak. The question is, does it stay weak? This is a stock that, it's 2.94% dividend, and it's a stock that sometimes does trade well, actually, or can hold up okay in a down market. So that's a stock, if I was looking to buy something, that is something that I might look to buy.
All right, Wave Trader here, looking for imbalances in AUPH. That's a NASDAQ stock here, so get those a little bit later.
828.
828.
Or 928. Yeah, 928, sorry.
I'm just looking at this one, AUPH, and I'll tell you, I don't know, imbalance or no imbalance. You got a buyer here. Just under the $8 level. Look at all those lows. Someone really wants to own this thing at the 760 area, multiple lows there. So if you're stepping out ahead of it, at least you may find some buyers there. Bob Wire, I'm still kicking myself on this TLT ahead of the Fed meeting because the chart just looks so terrible that, and you knew rates were going up. What a contrarian trade. But is it trading up? Because you did have a triple top there. Let me see. Is it trading above that? I bet you it is.
The TLT?
Yeah. It had 3 highs. Let me see in the TLT.
Yeah, it's a little bit of a breakout right into the next triple top area, though, Joel. 122. You go from one triple top, and it's going to blow through that and probably open right in the next triple top.
That's tough. All right, Spencer, 9 a.m. You want to wrap up today's show and preview Tuesday?
Yep, we got at least 2 guests on the docket for tomorrow. One is Nick Shaheen. Obviously, it's Tuesday, and the other, Bob Wire, a listener from our very own chat room, will be joining us at 9. If you listen to the show and you want to come on and talk to Joel and Dennis and myself, just email us, premarket@benzinga.com, and we can maybe work something out there. If you missed any part of our show today, you can catch the whole thing again. It's on YouTube, or the podcast is on iTunes, SoundCloud, and Stitcher. Just search for PreMarket. Please remember that all of the information, material, and content from our show is for informational purposes only and not meant to be investing or trading advice. Hope you enjoyed our show today and our chats with Tommy Lackey and Warren Lorenz from Tech Meets Trader. Have a good rest of your day. We'll be back with you folks on Tuesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.